Welcome to another educational video by my solo 401k Financial. Please like this video and subscribe for more videos like this. In today's presentation, we will review the differences and similarities between a self-directed solo 401k and a self-directed IRA. One requires a trustee and the other requires a custodian. As you will see as we go through these slides, the solo 401k is a vastly better option. While there are many more self-directed IRAs than solo 401k plans, the self-directed solo 401k is hands down the better retirement account, as we were going to find out as we go through these slides. Virtually anyone can open a self-directed IRA. It's an individual retirement account. In order to open a solo 401k, you need to have self-employment activity, because a 401k is really for a business and a solo 401k is for someone who has their own business, so a self-employed individual. Unlike an IRA, the business owner can serve as the trustee of her own solo 401k plan, which allows you to have more control and certainly less fees than a self-directed IRA. Now let's go through the major solo 401k advantages as compared to a self-directed IRA. So with the solo 401k, each participant has the option to borrow or take participant loans. You can never borrow from an IRA. If you're going to invest in real estate using debt, so like non-recourse financing, if you make that investment through an IRA, that investment is going to be subject to unrelated debt finance income tax. Whereas if you were to make the same investment through a solo 401k, it will be excluded. There's an exclusion for solo 401ks. You have much higher contribution limits that apply to a solo 401k as compared to a self-directed IRA. With a solo 401k on top of that, those contributions could be Roth contributions. So the Roth contribution limit is much higher to a solo 401k using the voluntary after-tax contributions through what they refer to as a mega backdoor Roth as compared to a self-directed IRA. It could be significantly more higher. With a solo 401k, you serve as the trustee, again, resulting in no transaction or asset holding fees. Now let's consider when you might want to use a self-directed IRA. So if you're not self-employed, so you don't qualify for the solo 401k, but you still want an option to invest in alternative investments, that would be a situation where you might want to look at a self-directed IRA. If you want to roll over funds from a former employer plan into that self-directed IRA, again, to invest in alternative investments, and you don't qualify for a solo 401k, you could use the self-directed IRA. Or if you have been self-employed, but you're no longer self-employed, and you've got alternative investments in your solo 401k, you're going to need to get those investments over to a self-directed IRA so you can still hold them inside a retirement account. Now let's look at the top similarities between a self-directed solo 401k and a self-directed IRA, and then let's look at the differences. So with the self-directed solo 401k and IRA, both can be invested in alternative investments like real estate. Both are subject to the prohibited transaction rules. So those IRS rules apply the same. Creditors. So that's a popular question, the protection from creditors. So for both the self-directed solo 401k and IRA, the level of creditor protection that it's going to apply is going to fall at the state level for both. Lastly, you cannot use either a self-directed solo 401k or IRA to invest directly in your own business. Of course, again, with the solo 401k, you can take a loan. So you could take a loan from your solo 401k to yourself and then subsequently invest the money by yourself, the proceeds of the loan, into your business. Now let's look at the differences between a self-directed solo 401k and a self-directed IRA. So reporting. Form 5498 applies to IRAs, doesn't apply to solo 401ks. Form 5500EZ applies to solo 401k plans. RMDs, Roth IRAs, specifically, of course, traditional IRAs are subject to required minimum distributions, but Roth IRAs are not subject to required minimum distributions. RMDs do apply, though, to solo 401k plans, whether we're talking about a pre-tax solo 401k account or a Roth solo 401k account, once you meet the required age where you have to take the distribution, so 72. Termination. When you shut down a self-directed IRA, a Form 1099-R is issued to report the closure. With the solo 401k at plan termination, both a Form 1099-R and a Form 5500EZ must be filed, even if the value of the plan is less than $250,000. And then lastly here, trustee custodian. So with the self-directed IRA, a bank or trust company serves as the custodian. Whereas with the self-directed solo 401k, you as the business owner serve as the trustee of your solo 401k plan. Thank you so much for watching this video. For more information, please contact us at business@mysolo401k.net or call us at 1-800-489-7571. Please like this video and subscribe for more videos like this.